Good morning, traders. I hope you guys are ready for pre-market prep. Yes, Money Mitch is here. I'm ready to go ahead and find out where the opportunities are. We'll take a look. Yesterday's stock's getting a little bit hit on that CPI data. We'll see if we can find some bottoming action. The future's definitely bringing us down a little bit there. We'll talk about some earnings stocks, Disney, Beyond Meat, Rivian, and I know that a lot of people are asking, what happened to the bros? We'll talk all about that. Stay tuned, guys. We got Marc Chaikin as the guest. Stay tuned. We got a great show for you, and hit that like. Let's go. I want to see a new record on likes today. Let's get it.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's go ahead. Let's get it started. Let's bring on the man himself, Joel Elconin. What's going on, man?
Not much, Money Mitch. How you doing on this Thursday morning? We're in the red. We're in the red. 39 handles.
Trying to shake a little bit of this red because I need a little bit of a rally to get short, baby. I've been doing great on the
short it, man. Short in the hole, and then when it goes up, short more.
That one's a hard one to do, you know. One of the things that I've learned to do is be careful about. It's like playing the long side, though, right? Like it's like buying the high of the day. It's a difficult game to play, to buy let's say the low of the day and keep going short on it. But hey, we'll see what happens.
Yeah. We'll talk later. I'll teach you a few tricks too.
I got
a couple
you see that, guys?
Let's
talk about the overnight futures action trading down as the sell-off continues. Let's take a look at those charts. What do you see on out there?
We just bottomed in the last bracket at 84.75. Trying to catch a bid here going into the open. Down 39 handles, 91.75. Crude bouncing around like a ping pong ball. That's down a $1.82, 103.89. You have gold down $11 at 1842.70. Silver not in the 21 handle, but in the 20 handle. Down 7.70 cents at 20.87. Holy mackerel. Bitcoin, down 1,300 at 27.880. And Ethereum, that's even going down more on a percentage basis, almost not nearly almost twice as much. It's down $184 at 19.21 even. So I tell you, I'll go to the monthlies here on the S&Ps and man, I just don't like I don't like those monthly areas. You know, I mean, is it too early to call for 3,500? Of course it is. A lot can happen between now and then. We got a PPI number coming out today. We got different things, but the monthlies are telling me, man, you know, keep the powder dry. That's what you got to do. Triple D, how you faring out there?
Fast market, trying. There's so much movement. I mean, it's the same story every day. They just keep selling them. There is no bounce to be had. I mean, we used to get bounces, but everybody's been hit so hard by buying the dip. Everybody is scared to death to buy the dip, including myself. I mean, I'm dip buying and selling and doing some ARB stuff, but from the long-term perspective portfolio, I was like looking at some of these prices like, man, I'd love to buy some of these stocks. Like you can look at something like a Square and you think, wow, you know, like this is starting to get, you know, not that far from value territory, but who wants to be the hero? I mean, the stock is down 30% in 6 trading sessions and it didn't even have any news. I mean, this is, you know, a widely owned stock. SQ goes from $104 just over a week ago.
Yeah,
it's $68. I mean, it's not like it reported earnings even, Joel. It's just getting hammered. I mean, this is like the story of so many different stocks. The SPY does zero justice for what is happening in this market. You see the S&P down 18% from the highs, and you think, man, this market's pretty ugly. It's not even close to that, though, because you got so many commodity stocks and other things that have helped it out. And the big guns really haven't sold off significantly. I know 20-25% sounds scary, but when you look at some stuff, some of these growthy stocks, these growth tech stocks that are down 70, 80, 90% from the highs. Fun fact, when a stock falls 90% from the highs, it's got to go up 1,000% for you to break even.
Yeah. It reminds me, the only time that I can consider this being like that was the .com era, but I know that you know a little bit more about that era than I do.
It's tough, man. This is just a very, very tough market to just come in and say, okay, yeah, this is it. This is the bottom. I can see my technical indicators are lining up. I'm going to load up. Should we be nibbling into some stocks? I like to think so. But then, you do it and then you get down it's not even like instant gratification. It's instant gratification on the instant degratification. Anything you seem to buy, it's better to wait a day. Like I thought about the $80 level in Square yesterday. It's $68 the next day. What the hell's going on?
I think Bitcoin's working against it too, right? Wasn't that,
maybe a bit, but it's not like the whole company is Bitcoin. Whatever part of it was, Bitcoin. I mean, okay, let's use any example. Use any stock you want to use on anything that's got like a little bit of a growth component to it. I mean, pick your poison. There's a million of them. I mean, you can look, and obviously, but look at a firm, AFRM. I don't think that's a Bitcoin play. I mean, this stock, Joel, was $30 a week ago. It's $14. It got cut in half in a week. I don't even think they reported. I think it's just down on the market. Yeah, these are incredible sell-offs. And I'm going to say this right now. In 2000 to 2002, when the tech bubble burst, I don't remember it being this violent to some certain stocks. Like overall market, sure. We had, obviously, and it was really ugly. And I think the S&Ps, and the Qs, we know, fell 81% from the highs. But that took 2 years. I mean, these stocks are trying to do this stuff in 2 weeks. This is ugly.
Yeah, it definitely is ugly on out there. A lot of stocks getting hit hard yesterday. Plenty of stocks taking a downfall. And it was kind of interesting because we did get that kind of like early morning, a little bit of a rally on up, but it looks like that was kind of a dead cat bounce. It just got shorted into. We're still seeing leakage on out there. Let's go to some of these earnings that are out there right now. I mean, I know that you guys had a little bit of an argument on this one. I'll call it an argument because you guys barely ever argue, but I'll call it an argument on Disney. Walt Disney Q2 adjusted EPS at $1.08, beating the $1.07 estimate. Sales of $19.25 billion, beating the $18.88 billion estimate. Disney reporting higher here on expected streaming subscriber growth, but then it just got hit. It bounced for a little bit there, and I'm interested to hear how Dennis saw the price action. One thing that I will mention is that they warned that they're still seeing impacts of COVID on its theme parks in Asia, but direct-to-consumer growth here. Disney's media and entertainment segment generated revenues of $13.6 billion, up 9% year over year, and the direct-to-consumer revenue within the same segment hit $4.9 billion and was up to 23% year over year. So at least DTC, they're not looking too bad, but looks like they're still struggling to get that revenue.
So I tweeted this out last night, and that was a kick-ass quarter. They did everything right. The stock was trading higher on at 108. And you know what I tweeted out? I said, I fully expect the stock to eventually go red here because it's a stock. It's a joke, but it's not really a joke.
There's no safety.
It's not really a joke
trade out there.
Because every single stock that reports eventually goes red. It's the market environment that we're in. That Disney quarter was pretty good. The parks year over year, were huge, obviously, because the parks were closed. But I mean, the numbers were fine here. The numbers were good. It doesn't matter. It doesn't matter right now what you say, what you do. It doesn't matter this, the subscribers. None of it matters. It just matters that this market is just selling everything. This is like you are feeling, a capitulatory event happening. It's going to bottom here. And I'll say it, in the next few days, we're going to see a significant rally somewhere in here because
we've seen rallies
massively oversold, and they just get sold back.
I know.
But I mean, this has gotten to a point where, at least on some of the stocks, where it doesn't even make some sense. And that's why I think you've got to be starting to nibble here. But I don't know, man. Every time I nibble into something, I lose money. So, this is, everybody's been so burned. And there were so many raw bullish people out there that stocks have to come back. I buy the dip, I make money. I mean, you got to break all those people. So I don't know where the breaking point is, but have we reached fair value on a lot of stocks? I think we have. But to a lot of people's points, I've heard this multiple times on CNBC, and it's common sense. I mean, just because they come back to fair value doesn't mean they stop at fair value. Then they go under fair value. I mean,
you're hitting a moving target, though. You're trying to say fair value based on these earnings, but what's happening is the earnings are coming down, right? So what you may think
they went way up for Disney.
Right,
that wasn't true.
Right. But I think for a lot of these stocks, I think that they're being a little bit more, forward looking, and they're saying, that, the earnings, that you're getting now for that are not going to be as good next quarters. I think people are looking a quarter ahead. I'd rather, and I'm not by any means calling a bottom today or any other day. I said this a couple days ago. I feel better about a bottom on a big down on a down open. Than like that open yesterday. Yeah. The pre-market action yesterday was just ridiculous. The popping up there and then take it down and take it back up. But I think you have more of a chance of a capitulatory bottom on when you get that down opening, because you're flushing people out. But when you have these fluff openings, I wish I had something in the monthlies to lean on. I don't. So we'll just stay with the daily lows. As far as the house of mouse goes here, I see the the pop up to 112. Man, you got to think. Let's see what happens at 100 today. I don't think you're going. There has to be a lot of people been thinking maybe about this $100 level for a while. So let's see how it reacts. Also, it was just a bad day to report. I mean, bad day, bad environment. And people sold the pop. So there is a monthly low at 100. So that's good. I like to hang my hats on monthly lows. The next monthly low, that's down at 92.56. I don't see that imminent on the horizon, but important to, it doesn't have to close above 100. It doesn't, have to 100, it just has to stabilize here. And that's what I talk about, is not necessarily the market ratcheting straight up, but at least consolidating and holding a level. Let's see if it's 100 in Disney.
I don't know, and there's no way for anybody to call the bottom here. I do feel like we're going to get some wicked technical bounce. I think if you're coming in and shorting stocks, you're going to get your head ripped off here eventually. But it's really tough. I mean, and people say stop buying. Well, I got to eventually start doing some buying because I did all my selling up there when we were near the highs. We know that. I've got to rebuy some of these stocks. I don't want to be 100%, like I'm 50% cashed on my RSP. I did a little bit of buying, brought it down to 46, and then the stocks collapsed, and I back up to 50 again. So I didn't even sell anything, but my cash component went up because the stocks went down enough. I mean, it's all just your own long-term perspective. Trading, I'm buying, selling all the time. I trade market neutral. I try to preach this, like I'm trying to take, little edges, and, that's why my trading account is very consistent. But, people say, why don't you trade your trading? Why don't you trade your long-term investing account? Well, one is, when I sell something, I never rebuy it. They say, well, rate covered calls then. And here's another thing is, I've been in the business a long time, and covered calls work awesome in a sideways market, little bit up, little bit down. Works amazing. They don't work worth shit in a market like this. You're writing covered calls. Oh, I protected myself. I got $5 on my Apple, and the thing falls 50 on you. Yeah. It doesn't protect you. I say, well, it's $5 cheaper, but you're giving up your upside and you're taking all the downside. Covered calls work very well in sideways markets, a little bit up, a little bit down. They suck going straight down, and they really suck going straight up. You know how I know this? Because during the financial crisis, I wrote covered calls on almost my entire portfolio. You know what happened in 2010? I got called away on all of it and nothing left. And I'm like, these were stocks that I had that I was way up in. If I would still have those stocks from 2010, there was a few things I didn't write covered calls on, like my MasterCard, like my Qs. Those are my biggest winners. You know, my MasterCard, I got up 2,200% in that position at one time. 2,200%. You never get that when you're writing calls on stuff all the time. You'll never get those 1,000% winners. So it all depends on what you're trying to accomplish. But don't think covered calls are free money, and don't think you're going to be able to time it all perfectly. Because, you know, I've been through it, man. I've been through markets way worse than this. I know it feels bad, but it has been way worse. You know, even the COVID in March 2020, when we were down 2,000 points in a day, that was worse. It was faster, it was worse. It bounced right back. And this is the problem is that was an event that nobody knew what was happening. The stocks V bottomed. Doesn't mean no V bottom here. This has been death by 1,000 cuts. You're not getting ARKK to go back to $160 later this year. ARKK goes down every day. It's in its death spiral here right now because all of these stocks, like there's half of them that could be zeros in her portfolio. So I've said jokingly, but not totally jokingly, when this was 70, its fair value is probably like $10, $10, $20 if they really start to hammer growth stocks. It's 35. It's halfway there. So don't think it can't get worse. And they're still getting inflows there. There's still people coming to ARKK and buying the dip. It can get a hell of a lot worse yet there. Don't kid yourself. Stocks that go down 90%, then they go down 95%, 98%. That can happen. I don't know if it's going to happen here. I think the stocks are oversold. I'm leaning towards the bullish side for the simple reason that everybody is so bloody bearish. But at the same time, every time I try to buy something, I lose on it. So tough market.
Well,
we got Marc in the background yet?
Yeah, we're gonna get Marc on right now. I just want to kind of wrap up what Dennis said there, and also kind of give you a perspective from my kind of trading. And I feel like I'm a little bit younger and have learned a little bit of a lesson during this time. You guys know I'm still holding my genie bag, even though the story was great. They were getting great contracts. Everything was looking great. It did get to a point technically where I felt I should sell it, but I kept it because I wanted to leave it in the investment account. I wanted to get the tax advantage. And instead, now I'm holding a bag. So I know that, Dennis, that you say maybe not trade your investment account, but I also have learned that you have to have limits also, because the next thing you know, you're holding a bag for 90%.
Oh, yeah.
Now, one thing that Joel has taught me and has really kind of been animate about is more about buying the market overall, right? And building that up. Maybe it's 5-10% of your income, whatever that may be. But I think that has a huge advantage because in that situation, how far down is the SPY right now? It's nowhere near as far as what my individual stocks that I took shots in. And so what I'm learning a little bit about that is more that in tough times, you'll really find out how diversification can help you out versus, like I did and put some eggs in that genie basket. And
we all have them. We all
have them. I'm bagging, holding a number of stocks as well. I have a little piece of Coinbase. That's going to be a zero, I think. So, I mean, that was obviously a bad purchase. Bought it like a month and a half ago. I cannot believe stock can fall 70% in a month and a half. But I'm bag holding that too. It was a value trap. You're looking like, wow, the earnings are there. But you're considering that people are going to be pulling accounts because they're worried that their cash isn't even safe in there. Yeah, so, I mean, there's a lot of different considerations. We all bag hold stuff from time to time. I will tell you, I never bag hold anything in my trading account, though. So, on my long-term investment account, yes, I go flat in my trading account every single day, unless I have a swing on. But, for the most part, I haven't even been doing swings this year because they've just, I'm not that great at swings on the short side. I don't feel like I am anyways. And the long side swings have just absolutely sucked. So, but I go flat on my trading account every day at 10 a.m. no matter what. So if I got something overnight and it gaps down 30% on me, I eat it. But in the investing account, I hold stuff longer there. And sometimes I think you're right. You should have just like an out and say, okay, well, this is, and I will cut losers in my investment account too. It's not like I don't sell losers in my investment account, but I feel like if the story is still there, if I feel like I've got a company at a reasonable valuation, and I'm not usually buying Coinbases, I threw a little bit in there, but, for the most part, I went through my portfolio about a week and a half ago with everyone. And, it's Apple, it's Microsoft, it's Google, was Amazon. It's Amazon again now because I just put it back in there. It's Q's, it's SPY, Nucor was in there for the longest time. I've taken a big chunk of the gain because it just got too much too fast. But I mean, I'm in kind of the same stuff. It's lower value. These stocks probably aren't zeros. Unless the nuclear missile hits us, these stocks probably aren't zeros. So, but yeah, a Genie, a Coinbase, everything that's basically an ARKK, those could be zeros. You
Yeah,
have
yeah.
to consider that.
Let's just say I don't
Could
get
be. I'm
too
not saying
happy.
they are. I'm just
I don't
saying they
get
have
too
the
happy when I
potential.
hear Kathy bought my stock, but let's just keep going. Let's go. Let's get into Marc Chaikin here, founder of Chaikin Analytics. I know he's ready in the back. Let's go ahead. Let's bring him on here. Welcome, Marc.
Morning, guys.
How we doing out there? How's the market? And what did you kind of see from that inflation data that we got yesterday?
Nobody's sort of been surprised at that because last month's PPI was suggesting that. But the bigger story here is what's going on in crypto to me. I woke up Monday morning and I had deja vu about 2007 when I read that the Terra stable, I call it fable coin, had broken the buck, so to speak, and traded all the way down to 30 cents. There's massive losses in crypto. And Dennis just alluded to one of my fears. I pulled my Coinbase account on Tuesday because I read that they amended their risk filing with the SEC because the SEC's put some new disclosure requirements. And what they said in there was, we won't go out of business if there's a major blow up. Well, anybody who tells you they're not going to go out of business is one step removed from a foot in the grave, in my opinion. So I don't know what's going to happen in crypto, but the losses are monumental. And that just sidelines all the young investors who came in here in the last 2 years because they're all in crypto.
Yeah, I have a question about that. I think, do you think this has a part to do with all the the margins that you see given out there in Bitcoin? I see often margin just kind of offered up there. Do you think that's kind of playing a role in the losses in Bitcoin?
I think there's so many different factors converging, but the desire of that Korean madman to stabilize Terra and Luna using Bitcoin is creating havoc in the marketplace. And I mean, let's be real about it. This depended on faith, on the faith of the community, and that faith has now been broken with Terra where it is and Luna trading under $1. Come on, guys, this was 120 a month ago, 2 weeks ago. You know, this Bitcoin has just become another risk asset.
How many of these other cryptos? Let's leave Bitcoin and Ethereum aside because those seem to be the two, if you can call any of these things safe, but I don't know if you can. But there is so many. There's like thousands of these other coins that it's just numbers on a screen and they're just doing different things in different ways. And people are saying, well, I have a diversified crypto portfolio. I mean, isn't all this stuff like just Fugazi? Like, isn't it just, I don't even know what it is. I mean, people, you can't just create, and to Peter Schiff's point, you know, Peter Schiff has been all over this and wrong for a while, but he's been proven right here at the end. I mean, to his point, you can't just create wealth from nothing. I mean, like they're just like, oh, I got a new coin, and then they dump it, and then somebody's getting rich, the person that's creating this stuff, and then they're suckering. Basically, there's a lot of suckers, you know, being suckered into buying a lot of these new coins on a story that, you know, isn't even, you know, going to materialize or just made up from thin air. And the only people really getting rich from all these things are the people who are actually inventing these coins and then dumping them on people on a hot story. I mean, at the end of the day, a lot of these cryptos are probably zeros, are they not, Marc?
I believe so. And, you know, you could see Bitcoin ultimately down 80%, which would put it at 14,000.
I said 10, so your target's near mine as well. So when it was 40, I said I thought it was going to 10. That's when I turned around and sold the majority of my Bitcoin. I had it for a long time. I just don't even like. It's like I couldn't even. I just can't stomach it, to be honest with you.
But the bigger story here, Dennis, is what does this mean for the stock market? And it's weighing very heavily on psychology. And we know that the sentiment indicators have been screaming buy here for about a week and a half. And we've got this drip, drip, drip decline that you were talking about where you don't have capitulation. And I think 2 weeks ago, Joel, you were shocked when I used the 4 handle or maybe the 38 handle, but here
Yeah,
we
I
are.
wanted to go into that with you real quickly because yeah, I said, well, if you remember, I said, well, first things first, let's take out the February low because that was the barometer that I had and the February 27th low, and we did break that. We did break that. So that's what I was using for the basis to question you on that. My question for you now is, I know you're talking about 3,800 as a downside target, and then turn around, and then what would in your forecast was after we hit 3,800, that's going to be a major bottom, and then we're going to end the year at X. Was that the scenario you presented me with?
No, that was going to be a bottom. I think that it's hard to make the bottom before July at the earliest, but more likely September, October, given the uncertainties about change of control and based on the midterms. So 3,800 is just official bear market territory for the S&P. We've got an options expiration coming up in a week, and I think the hope was they would pin the S&P at 4,000, where a lot of the open interest is. But now I think we'll be lucky if they pin it at 3,800. And I think
For the June expiration?
no, we've got an expiration of May options coming up
Oh, so 3,800 for 95 handles down for
yeah,
a
but
week from tomorrow. Then
you've got the algos who are just putting enormous pressure on this market every time you see a headline that has a hint of a bearish flavor to it. The algos are in there selling, and there are no buyers. There are just no natural buyers in this market right now.
so you don't want to try and call a rebound until you feel that we have a bottom.
Exactly. Well, I think rebounds are for traders, and they're really tough.
I mean, are we in a Dennis and I kind of had this discussion yesterday, and the prevailing thought is, yeah, in 5 to 10 years the market's going to be higher, and that is proven out over time, right? I've had some weird circumstances over the last 2 years that I don't know if you can really figure into the factors, but I mean, I think what most people and what the market psychology is that when is that going to be broken? That yeah, we're going to be higher in 5 to 10
Well,
years.
I think we'll be higher in 2023 because of the midterm election year pattern and the decile pattern. Markets tend to bottom out in years, the second year of the decade. And, give or take 6 months, I think we're going to make a low in 2022 and then rally 30 to 50%. So I don't know how that gets triggered given the inflation numbers. We got PPI coming out in a minute.
Oh, that's right. Dennis, PPI.
1 minute.
Okay, yeah. Oh,
So
good. Thanks, Mark.
More than 10% year over
Mark
year.
saved me, man. Man,
Yeah,
I
thought about that when we came on.
But look, we've been in a rolling bear market. It started with stay-at-home, shop-at-home stocks. It spilled over into every speculative vehicle from EVs to SPACs. Then it started spilling into the Amazons of the world. I mean, when you look at the headwinds you've got Amazon cutting expenses, cutting back on expansion, basically soft numbers. That's never happened in the investing lifetime of most of the people who are active in the market. So this is a tough climate, and I think we'll see 3,600 before July. It could get a rally of 5 to 7% at any time, but these rallies are going to be over very quickly, and I would not bottom fish in tech. The only place I'd be looking to bottom fish is in energy. I still love the energy complex. That dynamic is not going away anytime soon.
So you're bumping it down from 3,600 to
from 38 well, we might bounce off 38, but 38 is just 20% down. It's an arbitrary number, and there's a lot of option strikes there. But 3,600 would be more in line with a typical bear market. So another, I don't know, at 6%, 26% down from the high. It's a time to really be defensive. I don't think it's a time to get aggressive.
All right, looks like we're getting in here. The numbers here, U.S. PPI coming in here month over month. We got April is at 0.4 versus 0.6 estimate here, and then we got that was the core PPI. We got USA PPI here. April's at 0.5 versus 0.5 estimate, and then initials jobless claims for May 6th at 203,000 versus 195,000 estimate.
All right, we got a little bit of a pop there, and it was sold. Got a little bit of pop over 3,900, and now trying to recover. So it's wasn't a disaster number like we had before. So we'll see if we can hold this 84.75. All right, Mark, thanks. I will jot down this 3,600 now, and we'll keep an eye on that. I'll back it down from the 3,800 and 3,600 by July. Whew, I don't know.
And by the way, on the upside, you got to get through 40.62, which is when you broke the February lows. So
Okay,
that's
great.
going to be a tough hurdle, depending on where we bottom out here. But that's your reference point. If you can get above that, then you got a shot at it, maybe a 10% rally from whatever the bottom is. But that's going to be a tough hurdle. Just like 4300, 4310 was a tough hurdle on the last rally.
All right, last comments. I got to ask a chat over here really blowing me up about it. They want to definitely know, how did you feel after the Unity report there? Definitely taking a hit. We've talked about Unity here multiple times. Mark, how do you see Unity now?
I see it as really attractive long term, but stops have to take you out of positions like this. Otherwise, you can ride them down 80 or 90%. I love the software. They're actually in the market with this metaverse 3D virtual reality, in the commercial markets, but very wrong on that one.
Yeah, hey, it happens. It happens to us all. Let's just say I'm probably going to be not drinking the bros coffee for a little bit.
There you go.
Happens to us all, Mark. We'll have you back on.
Be well, guys.
Pleasure
All right,
having
thanks,
you on.
Mark.
Man.
Okay, all good. Get Joel, get Dennis back. He's been marginalized.
We'll get him back.
He's a busy man. He's got a lot going on today.
Yeah, he's
Take
working,
it easy,
man. All right, let's go ahead. Let's keep going, Joel. You and I
Sure.
can keep it going here.
We can. We're kind of lagging here. We're lagging. Let's catch up. Let's do some stocks.
I mean, we got a little bit of movement there, but there wasn't too much off of
It's
that
a little bit of
number.
a pop. I mean, the last hour is, I'll say the last 34 minutes has been somewhat constructive in this market. You made the low at 84.75, and you got a little bounce. I mean, we've seen what's happened to these bounces. Once again, when we're gonna have there's going to be wicked rallies today, right? You saw what happened yesterday. What the down open gives you, a little bit more, margin selling, some people just puking it out today, maybe get a pop. The monthly's got you nothing. I mean, Mark mentioned 3,600. Next monthly low was 36.76.75. So we're thin. I mean, we talk about the monthly charts all the time. And, when you get into air pockets in monthly charts, then they tend to be air. But let's just take it one day at a time. We did the Disney earnings. Where do you want to go to next? You want to go to the Coinbase news, or we kind of already covered that? How about
not really. I mean, there's a million stories we can cover here, but let's talk just this Coinbase here. And yes, full disclosure, I have a small position, which got a lot smaller in the last week in my long-term account, which was a big mistake. Dead wrong on that. I mean, we broke down from 150, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13 trading sessions ago. The stock's $48. It fell 70% in 13 days. I don't even know what to say. These are bigger moves than I saw in 1999, 2000. I don't remember seeing the moves this bad. So it's violent, man. This is like, this isn't just this stock. This is obviously one of the ugliest ones, but I mean, anything to do with crypto. And I don't know, people are asking me on MSTR if that margin call story, we can talk both these at the same time, Joel, but somebody was saying that, they're levered up owning Bitcoin, and somebody was saying if Bitcoin went to 21,000, then MSTR would have to meet some nasty margin calls. I mean, the market is trading this MSTR like that. I mean, levering up to buy Bitcoin sounds insane to me. I've never really followed MSTR very closely, so I don't know the story here. But I mean, I guess if you're a true believer and you want to lever up to buy Bitcoin, but man, I think being 100% invested in Bitcoin is scary. Imagine being 200% or something invested in Bitcoin. It sounds asinine to me. Anyways, Coinbase, I don't know. Like, I think people are worried about their accounts. Marc closed his account. I don't have a Coinbase account, but after reading, what I just saw there, that, they're talking, well, we're okay on bankruptcy. But don't talk those words, because you start talking about that, people start thinking about it. You kind of got like, probably a few people closing their accounts today that are worried that maybe my crypto's not safe there.
Yeah, one thing that I will state about this, and just to kind of put it out there, you hear often cold wallets, guys. Don't be afraid to take your Bitcoin off platforms. I think this is what a lot of investors are just not educated in. You don't need to really run away from the platform, but you need to take your Bitcoin away from there. It needs to be in your wallet, in your cold wallet. Then you're okay. Then you're not going to get it stolen from you.
I mean, it's okay because no one could steal it. It's not okay that it can get crushed in value.
100%.
I mean, yeah. I mean,
100%.
And they can still steal it. I mean, there's hackers in here that I know they all say it's unhackable, but like I said, I follow that kid Dynamite, on Twitter, who I don't know who it is because he just runs by that handle, but I can tell from following from years, this is a smart person. He got hacked and had all his Bitcoin stolen. I mean, right out of his own wallet.
I would say he made a mistake somewhere along the line, Dennis. If that's what happened.
I'm telling you, Mitch.
I would just.
There's going to be ways that even the smartest, you're going to see the hacking is not going to go away.
That's normal. I mean, hacking has never gone away, right?
Yeah, but I'm going to tell you something again here, Mitch, and for all you and for everyone who's new out there to the real world. When your bank gets hacked and they take the money out of your account, you go to your bank and you say, your problem, give me my money back, and the bank gives you your money back. You don't have that recourse when you're holding this wallet on your own. So you're just gone. Your money is gone. So I know when I have my money in the bank, unless the bank folds and goes under, but then there's even insurance for that up to, a certain amount, obviously, depending, look at your insurance. If you're really, really wealthy, maybe you want to look at that. But I mean, this is an issue. It is an issue. It's an issue why I don't even like holding the Bitcoin period, because maybe I do screw up somewhere. Like, I don't know, maybe somebody gets my hold of my code or whatever, just for whatever reason. Maybe they come in, they hold a gun to my head, give me your codes, and then they run away with my money. I don't have the recourse. So I'm just saying, I'm more comfortable having my money in a bank, and maybe the government's going to come in and they're going to intervene and freeze all my accounts, and maybe it's going to be a Ukraine situation. So I get it. I get, in Ukraine they probably were better off holding Bitcoin, but I don't feel like North America is Ukraine. I don't feel like the government's going to come in and seize all my accounts here tomorrow. So it's scary. And I know all the crypto people are going to hate me for these comments here, but there are people who think like me and say, I don't understand. Mitch, I don't understand it. Maybe call me what you want, a boomer, call me whatever. But I don't understand how anything can be completely safe from hackers. And I don't believe it is.
I won't get into the technical aspects of it. I mean, we could talk all day about this. And I mean, at the end of the day, I mean, I'm sure everybody's gotten a virus on their computer. So, I mean, we can get into all that. Let's get back into the earnings there. Let's get out of the coins there. The full disclosure, I'm still short Mara. So we'll see what happens with those Bitcoin stocks. But enjoying a little bit of a short in that department. We'll see what happens. Let's transition to the earnings that were really important. Let's go to Rivian here. Rivian earnings coming in here. Let me get you the numbers here. We got an adjusted EPS of a loss of $1.43, beating the loss of $1.44 estimate. EBITDA loss of $1.14 billion versus a loss of $396 million in the same quarter last year. Rivian reaffirmed full year 22 guidance for adjusted EBITDA loss at 4.7 billion and a production of 25,000 units. Wells Fargo, I'll call him Wells Fargo here,
Where'd you
stepping
get
up
that
to the
from?
plate. I've heard that one before, Joel. They maintained equal weight on Rivian Automobile and lowered price targets to 24. So what are you guys thinking here? Rivian?
24 vehicles?
No, well, 24 is the price target from Wells Fargo.
Oh, okay.
Not 24 vehicles.
Like, oh no. I'll give resistance at the close, and that's it. I mean, if it gets green, it gets green. That's it. I'll give you the pre-market low. The pre-market low is 1826. Looks like it's firming up here. At least you got someone in the pre-market here trying to buy at 1960, 1970. But just going back, what about, is there any good mattress stocks out there? Because you talk about crypto wallets. I'm thinking about taking all my money out of the bank, and I might need a bigger mattress. Purple Innovations. Is there any other MFRM is gone? Is there any other mattress stocks out there that maybe will get a bounce? People pulling their money out of the banks and putting it in their mattress.
The purple mattress.
I'm not pulling my money out of the bank. I mean,
I'm joking.
There's so many people that just take and run. Oh, why don't you learn more about crypto? Why don't you learn more? And I'm not going to get off this right now because I'm pissed off about it. But I'm just trying to say, like, the people who are so into crypto, they can't see other people's points of view. I'm trying to say, grandpa, there's a lot of money out there, including me and probably Joel, that aren't interested in learning about crypto. And you know what, Joel? We're not losing 70, 80, 90% of our money now either. So I'm not attracted to come learn. Oh, I'm excited to go learn about crypto now. I mean, this is all coming to roost, is what stuff we've talked about. So, I
got to be on the
crypto
opposite
crash
end here,
2 weeks ago.
The market has two sides. I got to be on the opposite end here. I don't think that you should
How much
not
Bitcoin
know
do you own, Mitch?
about Bitcoin.
How much Bitcoin do you own?
0.
Well, you're not on the opposite end. You're on my
0.
end. Then you're on my end.
But I also feel that we should start learning about it, right? And I also feel like what you need to be worried about here is your asset allocation. How much do
It's
you
not
have
an asset class.
towards?
So
There you go, Joel. Bingo.
Well,
it's not an asset class. You can't
Bingo.
value it. You can't value it.
This isn't real estate.
There's no value. At least if you buy a crappy piece of land, right, and you pay $100,000 for it, and you want to get out, you offer it at 70, you offer it at 60, you offer it at 50. You know, you still got the land, and you still got to pay the taxes. There's the only thing that with Bitcoin is what someone else is going to pay for it.
Yeah.
And no one's paying for it. It's like they're going to write down the Ponzi schemes of Ponzi schemes. They're going to make the Tulip Festival look like a birthday party for a 5-year-old. I mean, you can't transact in it. You can't, go buy a pack of gum with it. You can't, it's not an asset class because you can't value it. In order for it to be an asset class, you have to be able to value it.
I think we just got to also just keep in mind that there was a lot of money made during the wave, right? And I mean, there's waves to the game.
That's what you hear about. Yeah, everyone
think...
everyone made a ton. Everyone made you hear about that, but you don't hear about the people on Twitter that lost their shirt, lost their family, lost Yeah.
I mean, if you're putting let's say like 30% of your value of your worth into this, I mean, I honestly wouldn't agree with that either.
30?
Well, Popliano is 95.
I wouldn't even
Jeremy
put 10.
goes on this show and he puts 80 in it. I think that Jeremy Newsom is one of the smartest people I know. I don't like that decision at all.
I'm sure
it's
he
not
did
diversified.
I'm sure
if it doesn't work out, if the Bitcoin doesn't work out, if for whatever reason it doesn't go to 100,000 or 1 million, and all of a sudden something happens and hackers start to pick up more steam, and people are like, I'm not comfortable having in Bitcoin anymore. And I think you're seeing some of that here right now. I mean, it's going to be ugly, but Jeremy Newsom is so smart. I love Jeremy. Jeremy's such a good trader. When he told me at 80% of his net worth in Bitcoin, I was like, oh my goodness, man. I'm scared for you, Jeremy. I'm scared for you. I love you, man. You're one of our, the best people
We'll
I
see if we
know.
get him back on tomorrow. We'll see
But
if we
that
get him
scares
back.
me.
We'll talk about that. I know I'm looking still at Bitcoin. I don't mind if I could get it down there below the 20,000 mark.
But
Joel and
why?
Rick waiting
Why
for that.
20?
Why
20?
20? Why 10? Why 5? How do you
Well,
value it, Mitch?
I'll give you.
This comes back to how do you value it?
You can't.
Really?
You got to go with, like people say, that it does trade technically. So I'm going to go off the technicals there, because there's no fundamentals, like you said. There's nothing that you can
It's
put
hard. Yeah, there's no cash
value on
flows
it.
to value.
So what I would look at is what happened last time, right? So it went from 20,000 to about 3,000. That was about an 85% cut on the last time that it dropped. I'm looking for the same around the same time. And so now we got from 60,000, it would go down to 9,000. So somewhere in between, let's say 20 to 9, that's when I'm going to start looking to at least maybe take a shot. But like always, guys,
Well, that's a trade.
You got to go ahead and take it like that. That's how I would take it, Dennis.
But that's a trade, Mitch. That's a trade.
Hey, that's how I'll look at it.
You know what? We can trade anything technically.
Of course.
I've traded Bitcoin. I trade BITO all the time. Technicals are technicals. And that's the lovely thing about charts. You can trade anything. And I don't mind anybody who's trading crypto. I don't have a problem with that. I'm just scared the people that are putting all their money in this, if for whatever reason it doesn't work out, or worse, the people who have these diversified crypto portfolios saying that, well, I'm diversified, so I'm okay. All these things are correlated together, though. Are you really?
Yeah, they're definitely correlated.
Are you really okay?
I mean, it's correlated to the market.
Kathy Wood thinks she have a diversified portfolio. She's getting all the same type of stocks. So there's no diversification really there at all. There's all the same types of stock, growthy tech. So I think a diversification is different sectors, different allocations, different things. So it's the way I approach it differently. I'm maybe not going to get rich because I don't put all my eggs in one basket. And you can get rich. Don't kid yourself. You can get very rich putting all your eggs in one basket. But more people go broke doing that, in my opinion. Anybody can win the lottery, and that's something too. But if you want to have some Bitcoin, and I had a little piece too, I have no problem with that whatsoever. I just think it's scared that people are going all in on Bitcoin, and they're buying this all in, this pullback here, saying, I'm going to buy this at 26,000 because I know it. Like the story with the person who sold his 4 houses and put it all in Bitcoin at 50,000. And now it's cut in half, but he's still a true believer and saying, well, I know I'm going to be okay because it's eventually going back to 100,000. It doesn't have to do anything. It doesn't have to go to 100,000. It doesn't have to go to 1 million. There are people on Twitter who preach this. I mean, we watch these bloody crypto commercials every single day, with the stupid menu coming out. What kind of crypto would you like, and going this. They're pumping this and throwing this down our throats. They're just pumping this stuff out. And a lot of it, maybe not Bitcoin, but a lot of it is snake oil. So you've got to be careful. There's a lot of crypto out there that is snake oil. They're not all 100%. Going to the moon. So you got to be very careful. If I was to own, I own a little piece of Bitcoin still. If I'm to own anything, it'd be Bitcoin or Ethereum, and that's it. None of these other ones. Maybe there's going to be some other ones that come, but I don't trust the other ones enough. So I'm just saying, stay diversified, stay safe, guys.
And just like the other thing, Mitch, when you were talking about the technical breakdown and what it did in this pattern. The only thing that I would caution, and I think I'm going to say this, to the market, is that there's different circumstances. Okay, there's different circumstances, right? And the perfect storm, with crypto and the meme stocks, was the pandemic, and. You had a situation. We're going to live with the ramifications of that, not 1, 2, 3, 4, 5, but 10, 20, 30 years down the line. So that was just like the perfect storm for something like that to take place. So to say the technicals, if it comes back, does a pattern that it did before, then I'm going to do it. Well, I'm telling you, we got vastly different economic stances, circumstances, and political circumstances. There's just a lot of different unknowns. And then you also talk about the overhead supply thing, which we've been, someone says, we replay the show and, listen over the years. We've talked about when things are going up, it's fine and dandy. Like everyone's happy, right?
Yeah, definitely.
Right?
We saw it.
But then you get people when it's coming down, okay, and it has these washes out, then it's a whole new market structure. It's a whole new market dynamic because
100%.
People are trying to get out at a break even or a loss.
I just to wrap up, I do agree definitely with Dennis that if you're putting way too much and you're not being able to control yourself on that side, you just got to take a look at it and understand a little bit deeper about what your risks really are there.
Yeah.
I think a lot of people aren't really calculating that risk, and I think that's what Dennis is also pointing to.
This is what they've done. If this is what everybody does wrong, newer traders look at how much money I can make, and they never think about how much money they can lose. This is everything. I mean,
Hey, well,
forget about the crypto
let's-
conversation for a second.
Let's talk about Beyond Meat, because that was a clear example of something for a while that a lot of people thought was going to the moon, right? And I mean, we can clearly see it didn't go to the moon. We could see here Beyond Meat EPS there, loss of $1.58, missing $1.01 loss estimate. So big loss there, about 57 cents they missed there. Sales 109.45 million, missing the 112.4 million estimate. And even Piper Sandler is stepping in here, lowering their price target to $12. So there you guys see it, the fake meat.
I can't believe, I seriously can't believe it took this long to pop this Beyond Meat bubble. It took so long. I mean, it's been coming down here for a while now, but we had Marc on this show a year and a half ago, and it was $80 then, and he was part of, he was saying he was selling the stock as fast as he possibly could, and the stock went to 200 after that. I mean, Marc has been proven right here. Good call, Marc. I mean, I've thought the same thing. I couldn't understand for the life of me how this stock was trading with a market cap of more than Tyson Chicken. I mean, this is just, shows you how hot the story can get, and how, investors just ignore fundamentals altogether when you've got a hot story. I don't know what the market cap of Beyond Meat was at the peak, but I think it was like, it was more than Tyson Chicken, I believe, at one point in time. One of the biggest real chicken producers in the world. And this, Beyond Meat, which the burgers are fantastic. I think the burgers are great.
I think you're the only one, Dennis. But
what's that, Mitch? I'm the only one? Yeah, I know my kid don't like it, but I think the Beyond Meat burgers are excellent. I buy them every once in a while. They're really good. But you got to understand valuation. The product, I think, is great, but doesn't mean you have to buy the stock. It's got to make sense.
Inflation too, though, right?
Valuation never made sense.
I think inflation played a big role here too. I mean, you saw Daniel in the chat talking about their margins also, and I think that's literally what's coming in here. I think in an inflationary environment, I think consumers start making a choice of not going just only to the healthy option, but also taking a economical option, right? I think that's a factor here.
In any, the story's broken. You've got to stop thinking about, and there's somebody on Twitter that reached out, or that just tweeted at me, and like, maybe I should stop thinking about where the stocks were and start thinking about valuation and what they were really worth, because this was never really worth 200. It was trading at 200, but the value was never there. I'm going to say on the show, Beyond Meat will never, ever, 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 ever. I'm going to say it today. Maybe I'm going to be proven wrong. Maybe we're going to this next bubble and everything will get hot again. I don't believe Beyond Meat will ever see 200 again. I don't believe it will ever see 100 again. I'm not even sure it'll ever see 50 or 40 or 30 again. I think Beyond Meat is eventually probably a $5 stock. So if you're buying here at 20 thinking it's eventually going back to 200, I believe you are wrong.
I don't think anybody does.
Joel, there's real believers out there.
Yeah.
People enter, they think, oh, it was 200, it's 20. I'm going to make 1,000% on this because it's eventually, all stocks come back. They don't. Maybe the market comes back, but the stocks don't. So just be careful when you're buying an all-time low on something, or a 52-week low. I don't know if it's an all-time low.
Oh,
yeah, it is. It's an all-time low by a long shot.
By a long shot.
You never want to own stocks making new all-time lows, because they just bleed you out. Death by 1,000 cuts, they bleed you out.
1857. That was the pre-market low. And next, if you buy this stock today or any other time, and they mentioned something about them working with McDonald's, okay, wait and just sell it, because that was the last pop that you had over 45 here. Was something like they're solidifying their arrangement or whatever. So that's what pre-market low 1857. That's all I can give you. Can't even give you, the bottom of yesterday's range. Maybe it may see the bottom of yesterday's range someday, and that was at 25.75.
Let's talk about the disaster earnings, and I know that a lot of people are going to come after me on this one, but I can't blame it. The Dutch bros, what happened to the bros?
Oh man,
I'll show you guys what happened to the bros, right? And so let's pull up the financials here, right? And don't
Yeah,
worry
do
about the
that.
chart. I don't think you want to see the chart. So look right here, guys. The total cost of sales, right? And so this is 2021, 2022. Look how this jumped from 66,508 to 121,167. Yet they only increase stores about, like, I think it was about 53 stores. I don't have that exact number right here, but I know it was around that 50 number. It wasn't too many stores that they reopened. Yet you see in their cost of sales here going way up. Why is this? Scroll down to the next page here where you start getting the revenues here. Look at this labor cost change here. In 2021, the labor cost was about 25.3, or let's say 32.5%. Now you're starting to see what the cost going way higher. This 25.3 went to 41.8. So the labor cost is affecting them. What's also affecting them? Food, beverage, food, and packaging. The inflation coming on in. This one went from 18.2 now to 35.6. What does this do? It just kills the margins, guys. And then what do you see them struggling on right now? Is the growth. So a growth story that, because it looks like the inflation coming into their business is just destroying the business here. Let's take a look at the chart now. You guys see it down. I think it was down like, I think over 40%, or I don't know, for 30% for sure. And it's one of those stories now that it's just getting killed. And a lot of this, I think, due to the inflation. It's not, I think that the hype is still there for the company. But the problem here is pure fundamentals showing right there that you probably don't want to be in this right now.
Mitch, you are spot on, and your analysis can be applied to so many quick service restaurants here right now. I'm scared of quick service for the exact reason you just pointed out, is people don't want to work for 10, 12 bucks an hour anymore. And quick service lives on that. I used to operate a Quiznos, and I can remember, like the labor was a horrible investment, but the labor costs were significant. And I remember them raising the minimum wage on me in Ontario, and I'm like, I'm already tight margins. I'm like, I'd love to give the kids more money, but these are tight, the revenue, you got food costs for 32%, and then labor costs are like significant. I mean, when you get the labor costs exploding on you like this, it puts franchises in a world of pain. They just cannot absorb the increased labor costs when they're jumping up and they can't find employees. And now it's not a matter of paying 12 or 13 bucks. Now we're going to pay 22 bucks an hour to try to get people to come in. You can't bring your labor costs up 40, 50, 60% on these franchises because they don't make money. It eats up all the margin. So there's tight margins, these quick service restaurants. And that's not just going to be for bros. It's going to be for a lot. So again, the inflation concerns here, not only from product, from paper and from all the other stuff that's probably hitting them as well, but the labor one's going to ding them the hardest. So, I'm sure the food costs and everything went up too. It's we talked about this about a year ago, or 6 months ago, where some of these restaurants and stuff, they're going to get hit from both sides. They're getting increased food costs, increased paper costs, and increased product costs, and then they're getting hit on increased labor costs too. And they got to pass that on to the consumer and hope the consumer absorbs it, and they'll absorb some of it. But some people will say, no, I'm not just going to eat out as much. And then if you throw a recession on, and to that CNBC's point of view, with their survey yesterday saying that people are going to dine out less, it was like 40% said people are going to dine out less in going forward if we're going into a recession, because that's one thing you cut out. It's scary. I mean, I'll make my coffee at home. That's not just scary for bros, it's scary for Starbucks too. And Starbucks continues to make new lows here too. $69 here now. You're like, what's going on with Starbucks? People start cutting expenses. They cut out $5 coffee.
Yeah, no, I mean, it's a worry for a lot of businesses now. I mean, I think we're going to definitely see what happens in these restaurants, what happens in...
I don't want to own any of those.
Yeah.
No restaurant stocks right now.
It's hard. It's hard to... You can't just go from, let's say, paying $10 an hour an employee to paying $15 an hour an employee and then think that you're going to have the same margins. What happens is just those margins evaporate really quickly if you start spending way too much on labor. So...
I mean, look at Wendy's. Look at Wendy's, Joel.
Wendy's.
We don't even need to do the technicals here. And I mean, it's nice to do technicals on stuff, but they all look the same. Everything's just been murdered.
That monthly chart there.
But I mean, here is, a business that's been proven over and over again. I like Wendy's. Wendy's is great. What is going on here? I bet you it's same problems. I bet you inflation is killing margins here.
Why is Mickey D's holding up so well?
That's interesting.
Mickey D's has pricing power galore. And what I mean by that is my kids, like demand McDonald's. They won't demand Wendy's. McDonald's has so much pricing power. I think eventually McDonald's succumbs to it all too. It's being seen as a safety trade, but it has a lot more pricing power than a Wendy's because it's got just the brand. And I notice, like, I cannot believe the cost of a Big Mac. They are passing it through. So I think there's going to be some businesses that, like a Starbucks, that'll struggle to pass it through because people might just cut out $5 coffee. But people don't cut out McDonald's unless it's really getting ugly because, it's kids focused as well. I mean, but again, to your point, Joel, I wouldn't want to own McDonald's here either.
Okay. All right. Lively debate. I think Mitch, you held your own. You did a pretty good job today. Only one more day.
I tried.
Only one more day,
always does a good
Spencer. But anyways, everyone have a good day. I'm going to miss a lot of stocks and I'm going to go cover them. And Triple D, go get them. I'll check in with you later on. Everyone have a good day.
So,
all right. Thank you, Joel. Definitely, guys, go check out PreMarket Prep Plus, and we'll be getting at it on live trading. I know we missed a couple of stocks that we didn't get into. We wanted to talk about a little bit about Tesla's supply issues, but we'll definitely talk about it. I think it's a big red flag with Toyota pointing out yesterday their profitability going down. And why? Because of raw materials. And then you're getting Tesla now saying that they're struggling in Shanghai to get the supply also for their vehicles. So it just shows me a little bit more, at least for me, concerns about inflation. But Dennis,
Ford and GM downgrade to sell today, Mitch.
Oh, perfect example.
This is what we've been talking about. It's why I sold my Ford. It's why I've got a little piece, but I sold 3/4 of my GM position too. They can't pass it through. People aren't going to pay it.
No.
And so you've got such major problems for them. Labor costs, material costs going up, but people aren't going to buy in Canada $95,000 pickup. So I think sales are going to absolutely plummet for new cars. I think it is going to fall off a cliff and maybe see one of the biggest falls that we've seen in decades in year-over-year numbers.
Yep.
And it's everyone I talk to, like, I'm not buying a new car. I'm not buying a new car. There's going to be rich people that buy new cars that don't care, but average person isn't going to pay $95,000 for $150 anymore. Yeah, and then the financing is going up on them too. I mean, you're not even getting 0% financing anymore. Right?
Yeah,
they're murdering the automotive. Scary.
Yeah,
I don't want
who wants to go get an auto loan with a 10% interest rate? I mean,
and to buy the truck, the $95,000 truck that was $65,000 a year and a half ago.
Exactly. So
it's up 50%.
There's a lot of issues out there.
Are 50%.
A lot of issues. Let's just be honest. There's a lot of issues out there.
A lot of issues you don't need to own.
Yeah, and we'll see what happens. Dennis, have a good day, man. We appreciate everything you do for us, and
stay positive.
Hey, good conversations. I mean, at the end of the day, there's one thing that we don't hide, and that's the transparency. Appreciate you, Dennis. We'll see you next time. All right, let's go ahead. We're going to start wrapping on up here. Going towards live trading with Benzinga. Yes, we'll start doing some live trading. Yes, guys. I've been short on Lucid. I'm still going to watch this. I think this story goes eventually, even maybe below 10. So we'll see what happens there. We'll see how the Bitcoin stocks perform. I've been talking about maybe some short ideas. So if you guys want to go and check some out, come to live trading. We've been killing it there. I have Zunaid, Ryan. We've been doing it. Hey, I'll see you guys on over. Hope you guys enjoyed the show today. We talked a little bit about the futures market, CPI data hitting some stocks, some earnings, Disney, Rivian, Beyond Meat. I'm glad we got through those. Of course, we had Marc Chaikin. If you didn't catch that interview, definitely rewind and check that on out. We'll see you guys over on live trading. Until then, right here on PreMarket Prep.